What's going on? How are y'all today? Brian Parker with the Brian Parker Group. Welcome back to Know Before You Owe. Today we're going to talk about a pretty important topic that is a concern, especially when you're writing a purchase contract and you're in a multiple offer situation. And that is, what if I have to write my contract higher than list price and I experience a shortfall in my appraisal? In other words, your appraisal doesn't come in at the value of what you wrote your contract for. Now, there's some answers for that, and there are actually some pretty easy fixes. The easy fixes really come into play if you're putting some money down in your transaction. So typically, if you're going to put anywhere between 8 to 10% down or more, and you have an appraisal shortfall, you can choose to bring the differential out of pocket if you want to do so. But with that 8 to 10% down or more as far as the down payment option, that lets your lender have the ability to talk to you about potentially restructuring your loan a little bit, to change your financing around, so you're not bringing any additional money out of pocket, okay? If you're putting only about 5% down or maybe a 3% down program or even using down payment assistance, then that becomes a little bit more tricky. Do we have enough money and to work with for what you have to bring to closing? And then changing the financing around so we can still make that work within the agency guidelines for the type of loan program you're trying to do. If you don't have the ability to bring the appraisal shortfall and we can't get that loan restructured to help you in that regard, I mean, you do have some options. I mean, obviously, if you have retirement 401k or something like there, you can take from that. Gift funds from immediate or near relative are also an option and everything. And working with your realtor to renegotiate your contract. Now, whether you have a shortfall and you're able to restructure your financing, or you have a shortfall and we don't have the ability to restructure your financing, you do have the option to appeal your appraised value with the appraiser. That challenge can be a little more tedious on some loan programs than others. Specifically VA loans, and then also some of the non-QM, non-qualified mortgage products, which we're not really talking about here right now. So if you want to challenge your appraisal, what will happen is me and you and your realtor will have conversations. Your realtor will provide to the mortgage lender 2 or 3 additional comparable sales that he or she felt would have been better comparable sales for the appraiser to use in the appraisal versus the ones that he or she may have used, and why those would be better appraisal comps. We then provide that rebuttal over to the appraiser, and then they get a couple of days to look at it and give a response. And their response can be, okay, I understand this actually might be a better comparable sale. I can put this one in, and they can adjust your value, maybe a little bit higher up or maybe all the way to your contract price. Or they could come back and say, no, I'm not changing the value because this is why I didn't use those comparable sales. I saw them. Because an appraiser will see the same comparable sales that the listing agent for the seller saw and potentially used or didn't use to formulate the list price of the home. So if you can't get the appraised value adjusted, then that's where we look at some of these other conversations and everything again. If you're worried about that before you write a contract, I'm sure your realtor has given you great advice. I don't believe he or she would let you contract at a price over a list price more than if they felt like what it would appraise for. And if they did, they're probably telling you how much shortfall they think you might incur. So you could have that thought process and conversation with yourself or your spouse or your family before you write that contract. And then also the options that you may have with your lender should it have that shortfall. It's a great topic, especially in a low inventory environment like we've had the last couple of years. For pre-existing housing, we're not going to see that really increase with a higher inventory, not in the next couple of years. So make sure you're getting all the facts and knowing before you owe. I'm Brian Parker with the Brian Parker Group. We'll see you on the next episode. God bless you. Hope you have a great day.